Markets are choppy and there isn't really much value out there at the moment, but I have identified a few places in which I would potentially be putting my money in the coming future. So in this video we're going to be going over what I'm looking at and when I would expect to get in. Before we get into this, please do consider subscribing to my channel, Mechanical Markets. I'm trying to get back on the YouTube grind, and obviously you can see here I've actually gone down 38% in my recent 7-day views, so we're not doing massively great at the moment, but we are trying to get back on it. So fear and greed, where are we? Oh my god, I'm really struggling to talk. So currently we are at 27 now. Last week previous close was 23, so obviously there is a slight improvement. Yesterday was a relatively decent day in the US market. We opened low and closed high, but it's still incredibly volatile. If we take a look at the VIX, the VIX, this is currently at 20 now. Early morning for me, I woke up on Friday morning UK time and I had a mini panic attack. Not really, but I was like, wow, markets have dropped significantly, and that was when the VIX was all the way up at 28. Historically, very good time to be buying for long-term positions, but for me in my little momentum trades, not so much. Obviously now the EMAs are well below all of the VIX essentially. I'm not sure how much that actually has to play into long-term volatility. I would imagine not a massive amount, but it is having somewhat of a potential effect as markets are continuously volatile currently. Okay, apologies, my camera decided it no longer wanted to work, so I had to restart my PC, so I hardly remember where we were. Where I think we were, I was going to talk about Shutter's PE, so this is now currently at 39.7. Earlier on in the week it was around about near the 40 mark. I think it was 39.9, I think. So market selling off is obviously having a bit of an effect on the Shutter's PE ratio, coming down ever so slightly, but hardly anything to notice, so therefore I don't really care about it, to be perfectly honest. Gold it was at an all-time high, but is now falling back down, which is better to see, of course. I am holding gold, and the gap between gold and silver is only increasing as well. Which one of these shall we look at? Where's the USD? Probably that one. Obviously silver's selling off as well, but the divide between the two is quite significant now, so I might be diversifying and selling a bit of gold and putting it into silver. I think I've already mentioned the VIX, so let's get on with the stocks in which we are potentially going to be eyeing up. Now, this is not financial advice and should not be taken as such. This is just my own research, and I'm not even buying the majority of these stocks currently. I'm waiting for key levels of validation before I enter into them. So stock number 1, Nebulous, ticker symbol NBIS. Now this has amazing price targets. It is in a bullish crossover and well above all of its EMAs, so it's exactly what I like to look for. However, we are catching this one later than I would have liked. Currently, if we look at the EMAs, it looks perfectly fine, right? But if we do then move to Bollinger Bands, it is now below the 20-day SMA, indicating that Monday could potentially fall further, or it could bounce up and we could see this potentially be a buy-in situation. However, I don't know right now as of recording this. This will be something in which I like to follow come Monday, Tuesday, Wednesday, and I will assess it then. But right now this looks really well set up for a really good momentum play essentially. The PE ratio is currently at 109 with the trailing PE approximately at -74, so this company is doing relatively well, and I think it's fair to say it could be a relatively good buy-in. So after recording that clip, I was thinking about the PE ratio. It didn't seem right to me, so I've now opened up Yahoo Finance. So the PE ratio is 147 with an earnings per share of 0.77, and the current price is at 113, but it's where the analysts really priced this stock in at. It looks to be something which I quite like. The trailing PE is actually at 163, and if we go to the analysis tab here, we can see that this company is growing actually at a loss of -12.72, so that might scare a few of you away, but I just really like these price targets and the momentum in which it's got currently. Obviously the Bollinger Bands are something in which could push this down. It could go to an oversold territory, but I think long term it still looks like a good buy-in, but I don't like the risk of that. I'd rather wait for a bit more validation. If we do actually look at the 50-day EMA here, we are quite far away from it. which could indicate that we might see price actually just continue to essentially trade sideways for potentially a month until this EMA catches it back up, and then we'll see this potentially take off again. So that's where I'm at with Nebulous. I'm keeping an eye on it. I'm not buying it currently, but there is potential. So one stock in which absolutely hurt me Friday was Hims and Hers. Now, there was a sale of $11 million worth of stock by the CEO of Hims and Hers on Friday, and that was really something which you can't predict, and it hurt me, to be honest. I bought in as we finally broke out of this sideways action here. I was like, right, finally we can see some upwards trajectory, and then obviously that comes out. So, but to be fair, I still think long term this could still be really good. It has now fallen through the 50 and 100 day EMA, which isn't good, of course, so it'll be interesting to see where this opens up on Monday. What does that say about the company? Well, I'm not sure how many shares the CEO actually has of the company, so it's hard for me to really comment, but it's a natural thing, so I don't think it says too much about where he thinks the company's going. He's just taking money off the table, and he's probably going to buy a yacht, which, fair enough. I think we'd all do the same if we were in that situation. So Robinhood, ticker symbol HOOD. This is a company which has made me lots and lots of money. So I spotted this when it initially broke out way back when in February, and I've been in and out since. Mostly recently, in the last few months, I've done really well in this stock, and currently it's falling back towards its 50-day EMA. Now, historically, and I'll just go off the recent example, what happens when we see this pattern? Essentially, we see stock fall back down to the 50-day EMA, and then it shoots back up, and typically that is the case. I'm not saying it's going to be the case, but I do like to see that. Looking at a Bollinger Band, it is obviously looking oversold currently. I'm out of this stock as I'm recording this, but I would potentially be getting back into it. However, I am worried about this stock overheating now. It's starting to look really quite overvalued. It's got a price to earnings according to TradingView of 65. I will check that though anyway. So according to Yahoo Finance, it is actually 65, which is true for once. So if we look here, they have a trailing PE of 73 and a forward PE of 70. So it's hard to say this will really go much further intrinsically, but momentum might still carry through, and I would potentially get back into this with a small position. So the next company is Broadcom. Now, obviously, this company has done absolute wonders over the last 12 months. It's up, I can't even remember the actual the year to date. Now, if we go on the year, it's up nearly 100% at 92%. Now, this has a price to earnings ratio of 89, which is already high, obviously, but if we go to the forward and trailing, the forward is at 36 and the trailing is at 86. And then if we look at the analysis tab, this company is expected to grow at 37% over the next 12 months. So it's fair to say that's not the next 12 months, sorry, that's the next year. This current year is at 38. I think it's fair to say this company looks really good for intrinsic growth alone, and then when you compare intrinsic growth with momentum, that's just really what I like to see. So price targets currently indicate a downside of potentially 14%, which actually isn't that much, and an upside of 31.68. So that looks quite ideal in my head. If we look at the EMAs, we're playing around with the 50 currently, and then if we look at Bollinger Bands, it's starting to look as if it's becoming slightly overbought, but these bands are narrowing, so it's not really what I like to see. I have a small position in Broadcom. It's quite a long-term play for me, this one. It was bigger, and then when we crossed below the 20-day SMA, there I actually sold out quite well. I trimmed quite a large amount of my position. So where do I think this will head over the next 12 months? I think momentum will carry through. Obviously, we have a lot riding on macroeconomic news lately, so anything I say in this video could actually just not happen, to be honest. I could say that these are all going to go to the moon, and then Donald Trump can make a tweet. I saw a meme the other day. It was like, your stock analysis is no match for my tweets. And I was like, that sums it up perfectly. You can do as much research and due diligence as you want, as much maths, analysis, but all it takes is one tweet from that man and markets can crash, or they can pump, you know? So it's hard to say where anything will go, but I like this. I like where it's heading. I like the outlook, and I like the chart. Okay, final one for the video, because I don't want to drag this on for too long. You've all got lives to live, and so do I. So ATAI. This is a company in which is pretty much it's a very small cap company, but it spiked my interest when I saw the price targets, and then obviously you compare the price targets with momentum. I just like it. So for the next 12 months, analysts project this stock to be a minimum of a 46% gain, with an average of 82.17 and a maximum of near 150%. So I'm very interested instantly by that. If we look at the EMAs, we are well above them, which could indicate that the stock is overheating slightly. However, if we look at the Bollinger Bands, it would say it is, to be honest. It's consistently bouncing between overbought and the 20-day SMA, which is what I like to see. I loaded up quite heavy on Thursday when it dropped down, and I'm doing quite well for it, but I do expect this to drop down again. This is a very, very high beta stock, very, very volatile. So if you like volatility, then this is the one for you, but if not, stay away. I can't say much about their intrinsic growth. Let's have a look on Yahoo Finance. So the company is only set to grow at 7% over the next year, and it's consistently very choppy around its earnings per share and its estimates. If we look quickly, I'm not going to do a deep analysis here, at their financials, their revenue trailing 12 months is 2,000, and if we look at, they're actually losing quite a lot currently, which does make sense because they're not in profit as of recording this. So it is a high risk stock in comparison to the others, but high risk, high reward. You got to do your due diligence yourself. The cash is 62, and then if we look at the debt, it's 24. So they don't actually, no, that's a good thing, sorry, they have enough cash to pay back their debt by nearly 3 times. So that's quite good actually. However, free cash flow, on the other hand, is not so good. So again, it's a bit of a high risk stock in comparison to the others, but I just like the outlook, and I really like the chart. To be honest, I am a chart guy through and through. When I see a good chart, I like to buy the stock. It gets complicated, but this looks good to me. So I'm going to end the video here. I apologize if you heard a lot of traffic in this video. I live basically within the M25. By the sounds of it, everything is just so loud around my house at the moment, and it always is, to be honest. So I hope you have enjoyed the video. Please do consider liking and subscribing. It would be greatly appreciated. Again, this is not financial advice, and it should not be taken as such. You need to do your own due diligence when researching a stock and buying in, because when you do, your capital will be at risk. So I hope you have enjoyed, and I will see you for the next video.